And it's the last one for the week. Helen, welcome to Business Morning live on Channels Television. Great to have you join us. I'm Ladi Williams. Let's take a look at what's in the news. We have a new report showing that projected that Nigeria's export trade volume would hit $112 billion by 2030, topping the volume for Africa at a 9.7% annual growth rate. Research carried out by British multinational financial services company Standard Chartered also mentions that Nigeria's future growth would be driven by its current and future investment in its digital and physical infrastructure and improvement in its business environment. Meanwhile, Standard Chartered says it expects global exports to almost double from 17.4 to $29.7 trillion over the next decade, which would be driven largely by 13 markets. And oil prices slid more than 1% today on concerns that a global supply surplus could swell in the first quarter following a coordinated release of crude reserves among major consumers led by the United States. Brent crude futures extended declines for a third session, falling 96 cents to $81.26 a barrel. U.S. West Texas Intermediate crude futures was down $1.35 at $77.04 a barrel. There was no settlement for WTI on Thursday because of the Thanksgiving holiday. Still, the benchmark contracts are set to post their first weekly gain in nearly a month as the overall volume of crude reserves release estimated at 70 million to 80 million barrels was smaller than market participants actually expected. Meanwhile, efforts towards enhancing transparency and accountability in the oil and gas sector remains a top priority of the Nigeria Extractive Industry Transparency Initiative. This is coming from the Executive Secretary of NATI, Dr. Orji Ogbonnaya, who announced that the 2020 Oil and Gas Audit Report will soon be ready for public presentation. He was speaking at a meeting in Abuja. Take a listen.
Our oil and gas report for 2020, the oil and gas report for solid minerals, and the one for fiscal allocation and statutory disbursement audits are nearing completion. I participated in the review of the reports yesterday with our consultants, and that review is ongoing as we speak. I do expect that by the end of today, at the end of this week, we would have a specific date when that will be submitted to the board for consideration and approval. And that will also help us in making sure that our reporting is frequent, is regular, is new, and is current. As of today, Nigeria as a country is in very good standing before the global EITI in terms of current information and data on our brand new website, which you can access at the touch of a button. We have also commenced procurement process for this year's industry reports to make sure that by early 2022, a consultant is already in place to commence the industry reports for this year.
And now to our first conversation. Well, climate change has been in focus with countries making pledges to reduce net zero emissions. At the just concluded COP26, quite a number of deals were signed for investment in renewable energy solutions in developing and emerging economies to move away from dirty alternatives. Energy in Africa is a scarcer commodity than in the developed world, with more than 500 million people living without electricity. Across the continent, only 10% of individuals have access to the electrical grid. And of those 75%, they come from the richest 2 quintiles in overall income. Well, to weigh on the challenges and opportunities, we have Goziem Okubo, Senior Investment Associate at Orlan Energy. Great to have you on the program this morning. Good morning.
Thank you very much. Good morning.
All right, so the world is in the middle of a profound, energy transition, a global energy sector that's actually dominated by hydrocarbons. Is in the process of a shift that's never been seen before. How ready is Africa for this?
Well, we have to be ready. I think that's the reality. Climate change is a real reality, and you can see that Africa contributes about 4% which is the lowest of any of the continents, to greenhouse gas emissions. However, we are disproportionately going to be affected by climate change and the effects of climate change in terms of increased, extreme weather events, in terms of famine and the effect on food security chains. So it's important for African leaders to take steps to, one, increase our sources of energy, and also imperative because of jobs. So what we find in the energy transition today is that the energy transition is going to be a major driver of the jobs of the future. You can see, I think, you can have about, the Nigerian government has a target to create about 250,000 jobs from the renewable energy industry. And so we see it not just as a solution to problems we have, but also an opportunity as well for other related problems, including job security in the country.
And right here in Nigeria, how do we actually balance this shit? Because, the dependence on dirty fuels, it's quite massive. You see in South Africa there, we see coal-fired. That's how they get their own electricity right there in South Africa. Looking at this transition now, and from a Nigerian perspective, how are we doing?
Well, today about 43% of Nigerians don't have access to grid electricity today. And so when we think about the problem and all the possible solutions, it requires a lot of money to build out the infrastructure that can electrify Nigerians and increase our productivity, which is really the goal of electrification. Off-grid energy offers a solution to that problem. Right now, with the energy transition, you're seeing a shift in the sort of financing available for new hydrocarbon type projects, and this will only become worse. So given some of the commitments that everybody has made, including the Nigerian government, to net zero targets even at the COP26, you're finding that financing is available for clean energy alternatives, and they are also topical. They're also important in order for us to close the energy access gap in Nigeria. That's what All is doing, is bridging that gap between the global climate change conversation and building sustainable solutions to actually providing a solution to an actual problem that Nigerians have, which is energy access.
Right. And talking about All, you have this demand aggregator for renewable technology that's called the DART program. Who's this actually meant for?
That's a great question. So right now, we have a renewable energy ecosystem that is full of innovation, right? You have mini-grid developers, solar home systems developers. You have a lot of technology companies that are providing solutions across the value chain. And the DART facility is focused on developers of clean energy projects, primarily using solar. Right now, what we see, the problem that we're trying to solve is that the industry is really made up of small and medium enterprises. And because of the dependence on foreign supply chains and manufacturers, these companies don't have the financing available to place large orders. And so I was reading a conversation on social media about why the cost of solar is so high. And this is one of the primary problems, is that there is no scale for the players in the industry individually to get any sort of economies, and benefits, discounts in terms of pricing. What we're trying to do with the DART facility now is to aggregate orders and place orders on behalf of developers within the ecosystem, get them access to volume-based discounts from high-quality suppliers, as well as take steps towards localizing the value chain for renewable energy components. But at the very beginning, what we're doing is aggregating orders so that we have, instead of 10 orders of 10 pieces, we have one large order. We can negotiate discounts and thereby bring down the cost of power, bring down the cost of logistics, bring down the cost of procurement for these developers, and enable them to also move faster in developing projects for the people who need them.
So it's actually possible to have these, solar products actually affordable, because they're quite expensive.
That is the goal of the program. It's baby steps. So the reason why solar is expensive, like I said, is because of the lack of economies of scale. The cost of financing that renewable energy developers have to face in order to get inventory, to get shipping done. And the DART facility, which is what Allon is handling, is a $10 million facility, was seeded with $5 million from Allon and $5 million from the Global Alliance for Energy and Planet. And basically what we're going to do then is give upfront financing to these developers, to eligible developers, in order for them to participate in the aggregated procurement program. It's really like a groupage program that a lot of Nigerian entrepreneurs actually do, where you can basically group your orders into a large container, thereby negotiate better rates on your procurement, on your shipping, and ultimately on your clearance and landed cost of your goods.
All grouped together. Well, tell me, what's the state of the renewable energy industry, and why is the DART program actually necessary at this point?
So like I said earlier, there's been a lot of growth in the industry, right? Today, Allon has invested in about 30 companies, where that number should increase by the end of the year. Different companies doing different things. We have mini-grid developers, we have solar home systems, distributors, we have aggregators, we have technology companies providing payment solution and customer management for these companies. There has been a lot of innovation, and there is a lot of financing now coming into the space because of the imperative of SDG 7. Allon's role is really about enabling that innovation, enabling finance, enabling an ecosystem. We are very research-driven in our work. In fact, the DART facility actually came from the idea for the DART facility came from a study that we had commissioned earlier in the year around the value chain that was conducted by SE for All, basically recommending two things: recommending aggregation as a way to create economies of scale, as well as localization of the value chain as sort of an ultimate solution to bringing down the cost of solar in Nigeria.
Well, it's quite a sizable investment for sure. But why is Allon funding, this DART financing facility?
Well, Allon, like I said, our mission is to provide energy access to unserved and underserved Nigerians. We have a target of facilitating 1 million new connections to sustainable, clean, reliable energy in Nigeria by 2030. And so there are three ways that we do this. We do this by directly financing companies. So we invest equity and debt into companies, which we've done. We've disbursed about $16 million within the last 3 years. And then we also enable the ecosystem. So that's our research. We use our convening power to bring people together, network. We have a program called the Allon Hub that provides technical assistance for companies within the space. And the third thing we do is enabling finance, where we try to crowd in capital, crowd in capacity, and crowd in investors and thinkers into the space in order to provide solutions that we may not be directly able to do. And the DART facility, I think, is part of our enabling finance mandate, which is work with partners. So the partners with the DART facilities are the Global Energy Alliance, as well as Odyssey Energy Solutions. So we're working with partners to come up with a solution to a particular problem that we have found, which is the high cost of solar and the slow pace of development of mini-grid deployments. And so that's really what we're trying to do with the DART program.
All right, so I'm guessing there are other forms of aggregate procurement that actually work. Do you have examples of such?
Yeah, absolutely. So aggregated procurement might be a bit of a fancy word.
Yeah,
it's really just about putting demand together to negotiate better prices from a party, which is, a manufacturer. In this case, what we're trying to do is reduce manufacturer margins on the procurement of renewable energy components, your solar panels, your batteries, your inverters, your meters, as well as reduce middlemen in the process, thereby reducing the landed cost of these equipment. And that happens everywhere. I mean, spare parts dealers do groupage deals where they, you can't really fill a container, but you work with a freight forwarder to get a part, so to basically fill a container with your goods and other goods to reduce the landed cost of what you're procuring. I think it's very simple. A lot of people do it in a lot of industries. One other example is in the healthcare industry, Gavi, which is the vaccine agency, basically does aggregated procurement of vaccines from vaccine manufacturers, as well as combining finance in order to get the prices of vaccines down to countries that need it, like Nigeria, and with the COVID-19 vaccine, for example, at an affordable price. So it's really the same concept that we're trying to apply to the renewable energy industry. Yeah.
All right, so I saw there's a lot of talk about, hydro energy, in this space. How does that work?
Hydro energy, solar energy, there are all sorts of innovations within the renewable energy or clean energy space, really. The thing that is basically connects all of them is using sustainable sources of power. In the case of hydro, water and the force of water movement. In the case of solar, the sun, which is an abundant resource that we have in Nigeria, across Nigeria, to create, store, and distribute energy, and that's the goal of sustainable, energy, which hydro is one of them, as well as solar.
Solar, right?
Yeah.
Okay, so looking at everything that Olon is doing right now, how does looking at the DART, how does all of this play into Olon's work?
Well, Olon's mission is simple. We basically are here to create energy access, sustainable energy access for Nigerians who are unserved and underserved by the present, grid arrangement. And so a lot of the people that we work with are thinking of solutions off-grid, mini-grid, or interconnected, grid-based solutions, CNI and market-based solutions as well. We find different ways to achieve this mission. And in the DART facility, like I said, this is one way where we see an opportunity to work with partners, to also support initiatives that the government has, in this case, the Nigeria Electrification Project. And our CEO, Dr. Boa, is very passionate about building coalitions, using our convening power to come up with solutions. So the DART facility is just one more step in our mandate to work with partners to create financing solutions for companies in the space in order to help them solve their problems and ultimately get Nigerians, the end users, which is really what the point and goal of this program is, sustainable and affordable clean energy.
Quite a laudable goal there. But looking at this, this sector going forward, what's your outlook, from a Nigerian perspective?
I think that I'm very optimistic about the sector. We've been operational for about 4 or 5 years now, and we've seen the growth of the sector, right? Today, across Olon, we have a early stage portfolio where we see a lot of early stage innovation and people just building things, right, and testing out business models, and we try to support that. We have a program with the USADF called the Energy Challenge, where we basically help that innovation. And then we are seeing now more growth stage companies that have proven a business model and are developing solutions, market-based solutions to communities that they have identified and are sustainably working with. So the renewable energy sector is going to be a driver of, I think this is very important, a driver of jobs. and
jobs.
innovation in Nigeria in a time that we really, really, really need it. And so one of the things that we're trying to do as well is support training, support capacity building in the ecosystem in order to drive that sustainable growth.
All right, we'll keep tracking your work.
Absolutely.
All on Energy. Thank you so much for coming on the program, Goziem Kubo, All on Energy Senior Investment Associate.
Thank you.
Thank you for coming on Business Morning today.
Thank you very much.
All right, after the break, we look at mobile money and impact on financial inclusion in Nigeria. That's in a moment. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning. To our next conversation now. See, data obtained from the Nigerian Bank Settlement System, NIBS, shows point-of-sale transactions carried out in Nigeria in the first 8 months of the year stood at 4.06 trillion naira, representing a 45% increase compared to 2.81 trillion recorded in the corresponding period of 2020. But the mobile money sector is not without its challenges, from regulatory issues to indiscriminate deployment of POS devices. Well, to weigh in on these matters, I have Victor Olojo now, the National President, Association of Mobile Money and Bank Agents in Nigeria. Great to have you on the program. Good morning.
Thank you for having me.
Yes. So, looking at this data now with the POS transactions hitting its highest for an 8-month period, what do you think drove this?
Yeah, well, again, mobile money and agency banking in Nigeria has come a long way. I'm happy to say that mobile money agents and agency banking partners have played a very critical role in driving financial inclusion in Nigeria. And if you look at the data, looking at 2016, where the data was just about 600 billion, and now, the first half of 2021, we're looking at 3.01 trillion. I mean, that is really massive. And many Nigerians can attest to the fact that we've made life, financial life, easy for Nigerians. Many Nigerians practically can't remember when last they had to walk into the banking hall to make withdrawals and all of those. So we would say very well that mobile money agents have played a very critical role. And we also would like to appreciate all stakeholders, including regulators, CBN, and all others who have made the enabling environment possible.
Yeah, talking about, visiting the bank, because I don't remember when last I used an ATM to actually withdraw money. But what impact will this have on the banks, with the ATM fees?
Oh, well, again, it's a mutually beneficial ecosystem. So, in essence, we are working for the bank. We are working for other operators, we are working for the entire ecosystem. So what happens most times would be a shared profit scenario, where an agent gets a commission, the bank gets a service charge and all of those, So it becomes very easy. Most importantly is the fact that there's been an impact, based on data released by NIBS. We have over 900,000, active POS agents across, the country. So what that means is that lives are getting better. So where issues of unemployment, issues of lack of jobs, well being taken care of by agents, being on the street. However, there are issues also that have emanated from the spring up of financial services through POS agents and the likes.
Yeah, because I see a lot of POS kiosk everywhere. Now, how profitable is this business, really?
Oh, wow. I mean, POS business, being an agent, a financial inclusion agent, has been very profitable for so many. But the Nigerian kind of system where people are quick to just jump because they see their neighbors doing a kind of. But, I'm happy to say that many people have made meaningful life out of, POS, going into agency business. So we have persons who earn as much as 15,000 daily. We have bankers who have resigned to go fully into, mobile money and agency banking. The fact still remains that the market is huge. Talking about the informal market, again, is way beyond imagination of any, because we have several factors. If you look at the data released by the Nigerian Financial Inclusion strategy document that was released in 2012, there was a target for Nigeria to say we wanted to achieve at least 70% inclusion rate, and several things were actually put. There were parameters on ground looking at payment, savings, credit, pension, investment, and all of those. Unfortunately, at 2020, this target was not met. But the fact still remains that we've been able to move the needle forward. In terms of the benefit, I would speak a bit about the benefit, because if you are to look at households, an average agent has a household, and agents are able to make a living. I have agents who have built houses. We have agents who have made meaningful life out of this. So again, what we need to begin to look at beyond the numbers is quality. We need to move beyond cash in, cash out. For instance, in the report that was released as of 2020, the target that was placed by the NFIS for insurance was at 40%. They wanted 40% of Nigerians to be able to access, insurance services. Unfortunately, the result was very abysmal. Just about maybe 2 or 3%. So if I were to look at micro-insurance, micro-pension, and all of the likes, the market is huge. And I like to tell people, for instance, if you take an example of distillers in Nigeria, many of them were only able to hit their gold mine jackpot when they began to make products in sachets, And that's what we've been clamoring for financial inclusion. An average person in the garage would be able to afford a dry gin in a sachet like 5-6 times a day. If we have financial products broken down into very small molecules, I believe we'll be able to achieve amazing results.
All right, looking at some of the challenges in that sector, we have indiscriminate deployment of POSs. How does that work?
Yes, it's very challenging. Many Nigerians are beginning to complain about issues of either fraud, or we have had issues of robbery via POS terminals. And as an association, we're beginning to take very stiff stance in terms of how these POS terminals are being distributed. We want to ensure that they don't fall into wrong hands. It's very disturbing. POS business is our source of income, our source of livelihood, and we won't open our eyes to allow people actually spoil the market, where we're feeding on, or what our source of income. Yeah, so we've been working very closely with all stakeholders in the industry to ensure that there is a measure of requirements. For instance, in insurance, not anyone can sell insurance products today. You need some measure of certification. So we are edging towards that direction in terms of mobile money and agency banking.
So is it that the bad agents get these POS devices and use it for criminal activity?
Yes, again, that's something we need to look at, because we need to sit down and look at the entire spectrum of things. How are these terminals getting into this hands? The question is, are proper KYC done? Those are the issues we need to find out. There are basic regulatory requirements from CBN as to who becomes an agent. Are those requirements being added to when signing up agents? So because of the target by MMOs, banks, fintechs, they just give out these terminals and it ends up in the wrong hands. So what we are doing as an association, for instance, at AMBAN, is to ensure that we have at least a minimum yardstick as to what are the requirements before becoming a mobile money and bank agent in Nigeria.
All right, talk about AMBAN. Now, your association recently had a 5th national conference in Abuja. Can you tell us, about the discussions and the outcome, basically?
Thank you very much. It was an amazing event, the largest gathering of mobile money and bank agents in Nigeria. Drawn from across the federation. We were able to sit down to discuss salient issues, and thankfully we had proper representations from government, regulators, and other players. The high points of the conference were issues around financial inclusion, on how to make it get better, on how to serve Nigeria. Our passion is to ensure that at least lives are getting better. We've seen discussions from the Ministry of Humanitarian Affairs about making lives better. There is no better party to be discussing or talking to than those of us who deal at the bottom of the pyramid. We've had issues about, the social welfare scheme and all of that, and people ask, where are this money is going into? There's nothing as impactful as we who are working at the bottom of, we deal directly with the poor people. So in terms of giving out those funds, the technology is there, it's just distribution. And I believe that if we are able to work constructively, we'll be able to positively affect the lives of Nigerians. And also, we saw the need to self-regulate. I mean, we've started seeing some activities that are not very good for the industry. You know, we've seen hawking of POS, you know, we've seen people transacting on bikes, you know, transacting under trees. So these are things that are not okay with us. And one of the major high points we came up with in terms of our communique is to see how we can self-regulate ourselves in ensuring that the industry is properly sanitized.
What about the technology now? You know, blockchain technology is a major talking point at this point. We have the e-Naira. You know, now how does it, you know, come into play in the scheme of things?
Thank you. I mean, fantastic question. I mean, e-Naira, it came as a very good novel idea. I mean, people liked it. But I'm very sure that at the heartbeat of the CBN is to see how Nigerians can be positively affected. You know, but unfortunately, we've not seen very good cooperation in terms of bringing in, you know, mobile money agents, financial inclusion partners in terms of e-Naira. Again, we are representatives of banks and fintechs in our localities. You know, we don't expect banks to be in all local governments, but you have agents everywhere. And it's expected that at least we should be good ambassadors for the e-Naira. How do I mean? An average Nigerian who comes to make withdrawals, at your point, would naturally ask, please, what is this e-Naira about? And at that point, it's good for us to also be able to explain, you know, the impact of e-Naira, but there seems to be a disconnect at that point. However, we have been, on our own part, be doing all the necessary sensitization as to how Nigerians can plug into, you know, the e-Naira system.
So actually, there's some kind of value chain.
Absolutely.
You know, with e-Naira.
Absolutely, absolutely. Absolutely.
Okay. So now, you know, going forward, you know, we've seen this, you know, industry is actually, you know, moving at quite an incredible pace. We've seen Airtel and MTN, they got the PSB license. How is that coming on?
Again, like I say, I tell people, like, the market is really huge. And I think that is a good omen for us in the industry. I mean, for us to see MTN and others who have gotten the PSB license. Like I say, aside cash in, cash out, we have several other packages. I mean, imagine Okada riders in Nigeria today are able to buy pension products. I mean, my brother talked about the earlier speaker who spoke about, you know, the SDG Sustainable Development Goals and keyed in on number 7. I mean, the fact still remains, for all of those 17 goals, financial inclusion plays a very critical role. So as much players as can come in will be very helpful in terms of achieving, you know, the goal. So for MTN coming in for the new licenses, I mean, huge, and very good for the economy.
So looking at countries like Kenya now and Ghana, you know, with the success of mobile money, what can we learn from these countries? I
mean, thank you very much. Looking at data coming from Rwanda, Rwanda has attained about 93% inclusion rate. Nigeria is still somewhere around 70. I mean, but the fact still remains that we have about 36 million Nigerians who are not financially included, no form of financial services at all. And there's a whole lot to learn from, you know, neighboring countries and other African climes. But the fact, again, is we are making progress in Nigeria. I mean, things are happening. We're happy to see traction. Just alone, the first half of this year, we've done well over 3.1 trillion in terms of transaction. By the end of the year, we'll be looking at 6 trillion, more than 6 trillion in terms of POS, transactions via POS. So we believe that the more we continue to collaborate, discuss, and learn, we'll be able to keep getting better by the day.
Right. It's been quite an interesting year, you know, and going into 2022 now, what do you see coming up in this sector?
Yeah, I feel like 2022 holds a lot of, I mean, good stuff for our industry. I'm happy to see more insurance, pension, and other firms coming into financial inclusion space. I'm happy to see that by 2022, we'll see more Nigerians enjoying the dividends of financial inclusion. We'll see more Nigerians being able to afford, you know, insurance packages, pension, even in the informal market, I mean, for me, that's where my heart, those are the ones we are how to save. I mean, those doing the menial jobs, the bus drivers, the conductors, those guys need to be fully plugged into the financial system. And I'm sure that by 2022, we'll be talking about more giant strides than we are now.
Quite interesting. And, still on this, POS agent here, I feel there's some risk to that business. What are those risks?
Absolutely. I mean, a lot of risk. And the country we have right now, risk is in fact sometimes overboard. I mean, we've lost well over 5 agents who have been killed this year. All because they're trying to serve and also survive.
Such cash,
Well, again, yes, I agree with you, because there's also a limit as to what an agent should do. But when the market is huge, and because you run a capitalist economy, you are open to serve as much persons you need to serve. So again, we've collaborated anyways with necessary security agencies. We also advise mobile money agents to ensure that they adhere to the directives as advised by their principals, by the banks, and insurance. I mean, and averagely, a mobile money agent should be insured, and also just do the necessary things to keep you out of harm's way.
Quite incredible. Well, we'll keep tracking that sector to see how it grows. We have, as Victor Olojo, National President, Association of Mobile Money Bank Agents in Nigeria. Thank you for coming on the program.
Thank you, my
Enjoy
pleasure.
the weekend.
Thank you.
All right, that's the conversation. Now, up to the market. Now, we have Willie Bong there. How's it going, Will?
Good morning, Laddie. It's a good morning, but not so great for the equities market. The market's deep further into the bear territory as investors sold off Nigerian breweries. They saw sell-offs in Seplat, MRS, and that dropped the all-share index further down by 0.32% to 43,108.77 points. And now we're seeing the moderation in the month-to-date and the year-to-date gains as well. We're seeing 2.6% and 7.1% respectively. Total volume of shares transacted, well, it was all in the green. Activity chart was in the green. We saw 266.12 million units traded yesterday, valued at 4.22 billion naira, and over 3,900 deals. We're going to move quickly to the fixed income market, where we're going to talk about what happened in the bond market. We saw pretty quiet trading there as investors, following the NTB auction that happened on Wednesday and the OMO auction that happened yesterday. We're seeing minimal trades across the board. There was some profit taking across the mid to the long tenor maturities, and there were also offers. Some investors were looking for beats on short end of the curve, but it was quite scarce given the decline in the one-year Treasury bill stop rate. But to tell us more about that, what happened at the OMO auction yesterday, we have Bankole Odusonya, is the head fixed income at UBA. Good morning, Bankole.
Good morning.
Bankole, could you quickly tell us what happened at the OMO auction yesterday? Give us a summary of what happened there.
Okay, just 20 billion was sold on the one-year instrument. Compared to the maturities we have been having on the OMO instrument, the central bank had reduced the issuance drastically and relied more on the use of CRR as a monetary policy tool to manage the liquidity. So we have not seen any change in the short-term instruments on the OMO, and even the long-end instrument. The stop rate has been at 10.1 for quite a period of time. On the NTB auction that happened on Wednesday, however, we saw a marginal drop on the one-year instrument from 599 to 589. The demand was very, very heavy, and that was because that's simply because of interest rate expectation going into next year. I could expand on the interest rate expectation next year, given the level of inflation we have. Inflation is at 5.1599. And going into next year, we also expect the federal government to borrow a lot. The budget is 16 trillion and does not even include provisions for subsidy payments. And if the federal government were not to remove the subsidy next year, it means that there will be additional costs and funds needed to be borrowed in order to spend for next year. So that's what feeds into the investor's mind, that why would I go in long or invest at 12 and 13% when it's possible that by March, April next year, when the budget season has actually upped the rates, in order to attract investors from 13 to about 15 and 16. So that's a possibility. So the interest rate risk is very, 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 very possible, and it stares at every trader and investors right now. So that's what's happening, where people are investing on the short term and then try to switch to longer assets when yields get better next year. So basically, that's what's driving the fixed income market and the demand for short term.
You're talking about the bit of apathy, maybe for long-tenured papers or bonds or every other instrument that's not dated at the moment. We saw for the treasury bills, we saw for the 24th of November 2022 paper, there was a lot of deals happening there. Yesterday, we saw 37.06 billion naira transacted. Why are investors eyeing that particular paper? It's a long-dated paper, I believe.
Well, if you look at the bond yield curve for Nigeria, the longest instruments we have are 2051 instruments. Those are 30-year instruments. We're not seeing so much demand on that. At the last bond auction, in fact, yield moved from 13%, the stock rate moved from 13% to 13.3%, meaning that the prices actually dropped. So we're seeing people stay away from the long end and hold short instruments. If you look at the FMDQ market on the 2022 January, it's at 3%, even lower than Nigerian Treasury bills instrument. So it means that everybody's trying to hold on short instruments in order to swap them for longer ones when yields improve, when prices crash and yields improve next year. That's the expectation. It has to do with the level of inflation we have. Most instruments are currently earning a negative real rate of return as we speak, where inflation is at 15.9 and the instruments you are holding are at 12. In fact, for NTB, if you're holding NTB and comparing the effective yield of NTB currently at 5.9 to 15, that's about 10% negative real rate of return. So those concerns are there with inflation, one, and then even yield expectation even going further. So why do you want to lock in on interest rates, long-term interest rate instruments right now, and suffer an interest rate risk moving into next year? So those are the reasons why people are holding on short-term instruments and buying, and we have seen very, very heavy demand on 2022, 2023, and 2024 rather than the 2050s.
Okay. Thank you so much for that interesting insight there, Bankole Odusoya, as a head fixed income at UBA. Thank you so much again. So, Ladi, we're coming back to you with the report we have. And it's not looking so great, especially what he said, the budget coming in. People are being cautious at this moment. Right. We're hoping that cautious trading is still happening. We're seeing the week, and analysts expect that to happen. It will be close to week,
Anyway, at this hour, I see a lot of markets are taking massive hits at this point with this new variant. Anyway, we'll see how the market closes today. All right, thank you so much, Will. All right, we'll take another quick break. When we come back, we head on to the UK with Juliana. Do stay with us. This is Business Morning. All right, now to get some developments in London with Juliana. Great to have you, Juliana. Good morning. Well, a report shows that Chancellor Rishi Sunak's flagship £2 billion pandemic job scheme to get young people into the work may not be delivering value for money. What are you hearing about this?
Yeah, good morning, Laddie. So the verdict is in on the Kickstart scheme, and I suppose the result's not going to make for good reading for the Prime Minister Boris Johnson or Chancellor Rishi Sunak, because the National Audit Office have deemed the scheme pretty much a failure. It was launched back in 2020. As you said, it cost the government about £2 billion to try and make sure that young people aged between 16 and 24 would be able to find long-term development, because, of course, during the pandemic, nobody was sure what would happen to the labour market once lockdowns were lifted. Now, the target by the Department for Work and Pensions was to ensure that about 250,000 young people by the end of this year would be put into quality jobs. That's not happened. They said that target is now unrealistic. According to government data, there are about 100,000 individuals in jobs. But are these jobs of good quality? The National Audit Office don't think so. We haven't yet had a statement from the government in response, but this is certainly going to make lots of headline coverage over the next couple of weeks, particularly as we know, even though the labour market in the UK is robust, it is 16 to 24-year-olds that are likely falling into underemployment or unemployment as a result of the pandemic.
Quite interesting. Well, we'll keep tracking that one. Well, UK car industry has warned of challenges just to remain operational after it produced just shy of about 65,000 cars last month, which is actually the weakest weakest in October since 1956. I guess it's still the semiconductor shortages, right?
Absolutely, it is the semiconductor chip shortage that's really battering the UK car industry. According to the Society of Motor Manufacturers and Traders, yes, just shy of 65,000 cars were produced in October this year. That's 41% down on what it was last year. One of the main reasons why is because there are so many car production plants across the country that have had to shut down. Honda, they've had to shut down their plant for about 8 months. So it's really difficult for the car industry to produce cars if they don't have one of the key components. Spokespeople from Jaguar Land Rover do believe that gradually we will start to see the numbers tick back up. But yes, once again, another industry in the UK has been battered as a result of the pandemic and the consequences that come following it.
Yeah, yes, it's another one. All right, Juliana, we'll get more from you at 1:30 in business with Business Incorporated. Thank you so much, Juliana.
Thank you.
All right, let's take a look at what's happening in the crypto space. Now, we see Bitcoin started a fresh increase, above $58,000 against the US dollar. We've seen Bitcoin trading close to the 60,000 range, and is currently correcting gains. Let's look at the market cap, though. We see $2.59 trillion. It's up about 1.05%. Volume traded this morning, total crypto market at $138.47 billion, up 8.90%. And Bitcoin dominance sitting at 41.8% there. Price of Bitcoin at 8 a.m. this morning, $57,216. 24-hour volume traded in Bitcoin, $34.14 billion. But at this hour, we see the market taking a big hit. The price of Ethereum, $4,273 at 8 a.m. 24-hour volume, $18.70 billion. Looking at the top also market cap, BNB there was up this morning, 3.64%. Still above the $600 mark there. Cardano still going down, $1.66. There's been a lot of talk of Cardano being delisted from some exchanges like eToro. And you see Solana, $206 is up, down about 4.61%. XRP, 0.46% up. Anyway, let's bring in Michael Enaji now to bring us up to speed. Great to have you, Michael. Good morning.
Good morning.
Hello, Michael.
Happy weekend. Happy Thanksgiving.
Happy Thanksgiving. Happy Thanksgiving, Michael. Well, at this hour, the market is taking a massive hit. To see Bitcoin actually around $54,000. It's all red. What's going on? It was green at 8 a.m. What happened?
Yeah, so there's this risk on the horizon of this new COVID variant that's emerging from South Africa. You're seeing the UK banning about 13 to 14, 3 to 4 African countries. So you're seeing the same fears that we had in March of 2020 re-emerging. And crypto is one of those assets that you can easily liquidate in today's environment. So it tends to be the first one that leads in a market environment. So that's why we're having a situation where, COVID variants, S&P futures are down 2%. So you're seeing, people take off some risk in Bitcoin. By no means is that a deviation in the price, but definitely it's an indication that the market definitely does feel some risk is coming on.
Right. Well, we'll keep watching how that plays out. Anyway, we see El Salvador recently launched a Bitcoin bond. Tell us about this bond.
Yeah, so this is the first sovereign bond that is issued in conjunction with some kind of Bitcoin element. So basically, what's going on is El Salvador is taking on a $1 billion Bitcoin bond, and the goal of the bond is basically to $500 million of it is going towards acquiring Bitcoin, and then another $500 million is going towards mining it through their volcanoes. And so this is a very unique situation because now you have, on a sovereign level, Bitcoin being introduced to the debt markets. And now El Salvador has a chance with that $500 million war chest in the next 5 years. Let's say Bitcoin 5 or 10x's. They have a potential to have about $4.5 billion on their books. As well as $500 million invested in green infrastructure for mining Bitcoin, and this is the shot that's been signaled around the world, and for places like Nigeria to know that all the waste gas that we flare every day can be put in a kind of product that is backed by some kind of Bitcoin note, and El Salvador is the first country move. I wouldn't be surprised if other countries with distressed energy assets that are just barely just wasting them away will try and plug into this Bitcoin network and try and seek some value for it. And they have it priced at 6.5%. So we'll bond, but I think it's a very solid instrument. The specs are still not completely out yet, but just the team alone working on it. It's Blockstream, so I doubt it's going to be anything that isn't solid, anyways.
Quite interesting.
But
quite interesting, yeah.
Right now, it's quite very interesting to see the capital markets, play this Bitcoin debt instrument, and at the end of the day, I think they're about to be oversubscribed to the tune of $2 billion. So. Right now, they're asking for one. The market might give them easily over two. So,
interesting.
We're looking to hope, and hopefully, this is the way Bitcoin liberates societies all over the world. And also, they had plans for a Bitcoin city, which would have zero tax rates for Bitcoin, as well as the other package of incentives to entice Bitcoin investors. But El Salvador is really looking to pin this Bitcoin thing on its back and open its economic possibilities for its citizens.
You see El Salvador leading the charge there. All right, Michael, we'll see the way the market plays out this weekend with this massive dip we see today. Thank you so much, Michael.
Thank you so much, Lady. Have a great weekend. Be safe.
You too. All right. And that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Enjoy your weekend.